Good morning. Good morning, everyone. I am just setting up my platform. I want to welcome you to ThetaFin. And on today's live stream, I will be covering and going over and, well, essentially picking up where I left off yesterday. I had a really enjoyable stream last night, going over how to identify trends, how to implement volume into your trading, and a few other touches on risk management as we always do. So, yeah, today will be a continuation of that. I am just setting up my stream, doing the admin, making sure that, it's appropriately tagged and all of that good stuff. And I will be starting this stream very, very shortly, probably less than 5 minutes' time. I am just wrapping up and making sure that this is appropriately tagged, and then we will get right into it. I will be picking up where I left off, just showing you guys how to identify trends. I won't be as repetitive and kind of go over exactly what I covered yesterday. I want to start encouraging viewers to check out the previous video. Probably ignore the first live stream, which I did. I'm probably going to take that down because the audio compared to now wasn't as good. So I probably will repurpose that, and maybe that's what I'll do today. I will approach this as the first video, go over risk management, how to assess risk, and then take it from there, pick up where we left off, and get into how to spot the next big crypto trend before everyone else. Touch on ways to implement this in your pump and dump strategy, as most crypto bros do. So, just be able to use these tips, tricks, and guides directly in your trading view, on whatever platform that you use, and then be able to take that directly into a live environment and make better and well informed investment decisions. So, yeah, just bear with me and I will be with you in the next few minutes. I wish I could sit here and talk and multitask, but I'm not very great at doing that and typing at the same time. So just bear with me and I will be with you and on the markets within the next couple of minutes. Right, that was a lot quicker than I had originally anticipated. So we will get straight into it. Um, just bear with me now, just to load up my MetaTrader, and we will get going. Um, just want to check on something. Oh, so of course I was right. Of course I was right. So, oh, don't you just love it when you are right? Okay, I will pick this up where I left off yesterday. Just do it as a continuation, and then we'll touch on the other things later on. So, um, yeah, without further ado, let me swap to my chart, and then we will take it from there. So, good morning, one and all. Good morning, good morning, good morning. Just bear with me a second, actually. There is something that I need to do. Right, I am back, and I'm back with you. I'm sorry about that. It's just a bit disgruntled this morning. Without further ado, it's really not acceptable. I've made you guys wait 10 minutes, but we're here, and let's get straight into it. So, following on from yesterday's live stream, where we touched on trend identification, and I explained my principles. I explained to you guys that look, when it comes to trading, right? Not just crypto, not just forex, not anything else that you guys may have access to trading. This also applies to the pump and dump strategies, because it's not it's short term, right? A lot of you guys buy crypto when it's red, or when you've seen a drop of 20% or 10% on the week, on the month, and then you invest to make a short term gain, and then you sell, or transfer your profits to something else. It's trading, right? You're trading price, based off of today's price not being tomorrow's price, as they say on the internet these days, right? Or yesterday's price not being today's price. Let me get it right. So, yeah, without further ado, let me just explain to you some core concepts and this system that I am touching on. And you'll notice that yes, some of the items I do not explain it in full detail. I try and give you guys a broad overview of the system that I am implementing and trying to kind of teach, so that you can see the fundamentals, that you can see the reasoning behind the decision making. And then, once you guys have a solid understanding of what it is that I'm trying to break down to you in these guides, you will hopefully see how all of this comes together. And depending on your level and how far you want to take this, um, once our platform becomes live, I have to be upfront. Um, ThetaFin is a platform that is being developed in the background, where we will be able to advise, give you guys access to courses, affordable courses. As I said, this is about transparency. We're not here to shortchange anyone, or act like this is just all free guidance with no, I guess, motive or anything like that. No, I'm giving you tips that you can use on the market today, but depending on the level that you're at and where you want to take this, I am letting you know now that there are courses being developed in the background on a platform that is bespoke. I am proud of that fact. It is bespoke. You'll be able to take your courses and your modules online at very affordable prices. And I'm hoping that with the value that I'm able to share with you today, tomorrow, and the weeks and months and years, that proceed on from that you'll be able to make use of the free content that we are giving to you, because it is valuable and implementable, regardless of your investment level. So just bear with me, bear with us, and without further ado, let's get into this. So this system is probably a system that you guys will not see 90% of the market using, because a lot of you will be familiar, or you will associate anything chart related with drawing trend lines, with identifying areas of resistance and liquidity and volume all on the chart. And I am here to tell you that that isn't, I'm not here to say that that's wrong. Just my system, or our system that we are teaching and advocating, does not really align with that. And it's not to say that that system isn't profitable, or it's bad or anything like that. But I'm hoping from what you see and what you're able to take, and the reason that I'm able to share with you, allows you to see the method behind the madness. Because ultimately you can be profitable. I know plenty of profitable traders that trade based on liquidity, support, resistance, and all of that. So I'm not going to sit there and just bash it. I think the most important thing, and I say this at the start of every single stream, is risk management and trading psychology. Those are the two biggest things that kind of influence and impact an investor or trader's success within any market. And that is the core reason, and one of the biggest things that advocates, or one of the biggest I guess benefits of the system that I am teaching and kind of giving guidance on, and giving you little nuggets that you can see and implement straight away. You can see their successes straight away, right? And yesterday's stream, I touched on it, and I will touch on it again, because I said something pivotal, and you guys can go back, because I'm still on BTC USD. So you can see everything that I said yesterday is playing out on the markets. All of those false moves to the upside have been crushed, and price, or the trend, is still respecting the top-down analysis that we did to show that there isn't enough volume. Again, that's the key word, and one of the biggest things that I want to kind of touch on today is volume, and seeing how accurate aligning averages, price action to a degree, and indicators showing you momentum, following the trend, and again, basing your decisions on an algorithmic approach, right? An algorithmic approach, meaning, I'm not going to sit here and throw a lot of jargon around, because this stream is to, to be inclusive. I don't want to sit here and use a lot of big technical trading and financial terms that will scare people away, because you simply don't understand it. I don't want to sound smarter than I am. I don't want to make this more complicated than it should be, because investors of all levels, we don't need to all have a financial background in order to make investments or wise investment decisions. We don't all need to understand all of these big terms and know exactly where to identify liquidity, or what market strength, and all of these other terms that you hear thrown around within this market and within content in this space. I just want to just give you that I'm not here to do all of that and bamboozle you with financial terms. I'm here to kind of break all of this down in a palatable and easy to digest manner, and show you ultimately how implementable these strategies and these concepts are, so that you can take them straight from this content, rewatch it, watch it a few times, get your head around what I'm saying, and be able to implement it in your own strategies tomorrow. Because I am not here cherry picking um, scenarios where the charts or what's on the screen suits what I'm trying to tell you, which is a lot, which is very, the content in this space is very littered with ideal situations where people use and trade and view in the past. Again, I kind of understand why people do that. It's a mix of both worlds, because they don't want to appear like they're giving signals in the real environment. But at the same time, I think that does then kind of open the floodgates to cherry picking market conditions that suit what you're trying to show the audience. And I am not here to do that on any of my videos or any of our streams. I think, you guys should call me out whenever you see me cherry picking the ideal situations, because we should all be able to make financial and investment decisions based off of today's market with whatever system that we're trading. Because it's no good kind of basing it on past performance, or if you see such and such pattern again, it doesn't help you in most cases. And that's kind of what I found over my years of consuming content within this space. So all of these strategies that are out there, I understand and have tried and tested a lot of them. And I end up asking myself that same old question. It's very easy to see these things when once they've already happened, and with hindsight. But it's very rare that you see someone showing you how they get to that analysis, or how they break down that technical analysis in real time, in on a live market, and in live market condition. So so I'm here just to touch on that, to talk about that, and show you a few things, tips, tricks based off of a live market conditions. And then I will go backwards and show you areas that kind of contradict anything that I have said, and again show you how volume and whatever I touch on today would have still saved you within those conditions, because I think that is the right way to show and teach these things. And of course, you like what you see, please subscribe. Please like the video. Please share it with someone that you know in the space that would benefit from it. It's not about keeping the knowledge to ourselves. It's about sharing, so that we can all become financially free, so that we can all build our empires, in the wise words of Walter White. For any Breaking Bad fans out there.
Jesse, you asked me if I was in the meth business or the money business. Neither. I'm in the empire business.
Precisely. We're all here to build an empire. So without further ado, let's get straight into it. So yesterday I touched on, identifying the baseline. So to anyone out there that doesn't know or doesn't understand what's on my screen now, please, I advise you to go and watch the previous stream, get into that and know what exactly is going on in terms of what we're identifying and what this line exactly is. And then from there, once you've got an understanding, it will take you about 20 minutes, 30 minutes to view and digest that once the video has started. And then from there, you will be able to follow on from these concepts, because I don't want to make it a thing where I'm kind of repeating myself too much on these streams, because I am quite conscious that there will be people that are picking this up, or finding this video for the first time and watching it for the first time, or consuming this content for the first time. I don't want to kind of go backwards and kind of restart the process every time. It's not really fair for those that tuned in yesterday. So yeah, please, the video is out there. Please consume that content. And yeah, without further ado, we identified this trend yesterday, these conditions. Yesterday, I touched on a top-down approach. I didn't really go into it in as much detail as I wanted to, but I am going to in this scenario, and I will be, going against one of my core teachings or core principles. Bear with me. So let's have a sip of water. I will be going against one of my core principles and drawing something on the chart. And again, this is just an example. And by all means, this is the only time I would ever advise you to draw anything on your chart. It's not to identify trends, because we can do that with and without these lines on the chart, right? When we're seeing higher highs being created, so higher highs being, in terms of looking backwards, right? This point in time led to this new height, and then this new height, and then this new height. So in that time, and obviously the lows, right? So in terms of the market moving in such a manner, these lows got higher each time, right? So that signifies a bullish trend, or an uptrend, or as some people say in supply and demand. There was a demand for Bitcoin, and there were a lot of buyers driving that market upwards, right? And then when you start to recognize lower highs, so that height was lower than that one, and then we got lower lows, so this low here was lower than that one, and so on and so forth, signifying a bearish market, or a market that is driven by supply. There's a lot of supply in the market. There are a lot of people selling more than there are buying, right? So we can identify that on an eye test. But what I try and do, and what this system and these principles that I believe in, and make up the core foundations and the fundamentals to the system that I am teaching, heavily kind of take away the subjectiveness of trading and decision making or investing, right? Because as I said at the start of this stream, the mind, the trading psychology, and risk management are the keys to success, regardless of what you are investing in. So whether you are a crypto bro that's on Binance, Kraken, Coinbase, and any other crypto space where you do a pump and dump strategy, you can implement this. This is for you. What's going to lead you to success is not winging it and basing your decision on speculation. So now, what is speculation? I believe drawing trend lines on a chart is speculation, because I can draw a trend line and you can draw a trend line, and they will not look the same. Trend lines are something that you can use to show you what happened previously, but I believe it's extremely difficult, and very speculative to execute and kind of predict where the market's going to go, right? And because this is all that trading and investment is. It is about making an informed decision, because it's all down to probability. We don't know what's around the corner. We don't know what price is going to do tomorrow. We don't. I don't, right? And this system doesn't. But what this system does give you is principles, or are principles, that help you make a better informed decision, beat probability, or make decisions based off of a higher probability of being correct. And I will show you that, to a point where you will look at trend lines and think, what's going on? What was I thinking? Was it this simple all along? And that's kind of, it will leave you like the guy in the thumbnail, right? Is it really that easy to identify trends? Yes, it is. What's hard is sticking to these principles and being disciplined. That's where the difficulty lies in any kind of investments, is suppressing your emotions and being able to call it quits on a bad trade when the numbers tell you that you're losing. you know, because that's what that's. Let me not speak too much. Let me show you a few things, and then we'll pick back up on that point, because I made that point yesterday, but I think I really need to double down on that and nail it and bring it home today. So once again, just bear with me a quick second, because the sun is blinding me at the moment. So just bear with me 1 second. Let me go and get a cap, and we will pick this back up shortly. Just bear with me 1 second. Right. That's a bit better. I can see again now. So yeah, as I was saying, what was I saying? Awkward. But yeah, so as I was saying, yesterday we went through identifying those trends and being able to identify market direction and the importance of discipline, financial discipline, investment discipline, and making decisions that are not emotionally driven. So, without further ado, here obviously we can identify that we are currently in a bearish trend, as we all know. I don't need to tell you that. The news tells you that. The price of Bitcoin against the US dollar tells you that. It's currently trading at 25, well, almost 26 thousand US dollars for one Bitcoin, down from 30K a few months ago, and even lower than that. From a couple of years ago when it was up at 60, almost 68, almost 70 thousand dollars. So yes, it's easy to identify that we are currently in a downtrend, in a bearish market. But what does that mean, and how do we get in? How do that's the killer question, and that is what I'm trying to answer today. So enough rambling on. I want to get straight into this now, and yeah, it's been half an hour of waffling. So let's go through some concepts on the market. So yesterday, as I said, I was able to kind of show you that yes, based off of the principles, and again, I encourage you to go back to yesterday's video. We entered a downward trend on the weekly time frame. This was supported by, sorry, this was supported by volume, because volume is currently showing that it's entered our sweet spot in terms of our zone for indicating volume towards the downside, volume within a bearish market condition. I went through with you guys yesterday this zone here in the middle, and I will briefly touch on it. Right, I will briefly touch on it so that when I'm showing you things quickly and kind of going at a bit of a faster pace, you will be able to follow along. So please make note, 30 minutes, and I will try and put a highlight on this. So 30 minutes into this video, we are talking about volume. I am showing you a volume indicator, which I use. It's one of many. And just to quickly just digress, these systems and principles that I'm showing you, and you will see in the next few weeks, I may be focusing on crypto now and this week, just because it's trending. There was a lot of news out there on crypto. It's the most traded asset in terms of the market at the moment, and it helps in terms of the channel growth. It's just a strategy in terms of the channel growth. But what I want to tell you is ThetaFin. At ThetaFin, we invest and we trade all markets, right? These principles work on all markets. I will show you the same principles, not exactly the same tools, but the same principles, so that you're able to follow an algorithmic approach, regardless of whether you're trading gold, whether you're trading crypto, whether you're trading and investing in stocks and shares. You don't need to be an intraday trader. You don't need to be a day trader, right? You can use these principles to literally have a look on the higher time frames to be able to get in and invest in a stock. You know, if you're if you've got some spare cash at the end of the month and you're following the age old, invest 20% of your income, right? That's what that's what we're told to do in terms of wealth and wealth generation. Invest in 20% of your income or 30% of your income into assets, right? That's step one. But being told how and which ones, that's the bit that you need to figure out. And that's the bit that we will be able to help you figure out. Applying the same principles within the stocks market, not exactly the same tools, but the same fundamental principles, right? So, yeah, so let's get back into this. So, volume. What am I showing you here? What the first thing I want you to ignore is, the trends within, right? Let's completely ignore that. I'm not here to bamboozle you and make things super difficult. That's my channel promise here at ThetaFin. We're not here to bamboozle you and make things difficult. I will not be using any terminology that I can't explain to you. I will not be using any terminology that kind of has no bearings in terms of you making a decision. I will literally just be showing you the principles, explaining the reasoning behind them, and how you can then use those principles or implement those principles on your own markets and your own charts to then be able to make a decision. And then I will back that up on the charts above so that we can align the two things together. So volume is required in order to keep momentum in a trend, right? To keep momentum, it shows you that there are a significant amount of people with supply, right? If you want to use supply and demand as your point of or as your term of choice. But again, to simplify it, volume indicates that there are way more people or a lot of people selling than there are buying. And in the other respect, there are a lot more people buying than there are selling, right? So there is volume, the quantity of people, there is enough volume to make a market trend either in a bearish manner or in a bullish manner. So whether to make a market go long or short, whether to have it, to make price rise or decline, it relies on volume in either direction, right? Volume relies simply means the number of people or the number of orders being placed in either direction, significantly outweighing the other, right? Volume. And then momentum is the pace of which that happens, right? So all of these lines and the patterns mean zero to you, right? Now, I've drawn a few levels on here. So I've drawn, and I won't tell you what exactly this indicator is, because again, it's subjective. I don't want you guys to be, completely reliant on just this one. I do have to swap it out depending on what I'm trading. I do have to replace it depending on what instrument I am looking at, because it's not a one size fits all. But again, I've tested over 800 of these, and this is the one that just in these current market conditions, it's working perfectly, and I will show you. So this this top zone, so between my 80 marker, which is up here, my 80 level, and my 20 level on this particular oscillator is, again, big word being thrown around already. I promised you guys I wouldn't, but I had to drop that one in. So on this 80, there's an 80 level, a 20 level, a minus 30, and a minus 70 level, right? Now, the reason for me choosing these levels, and it's a shame it's a shame in this particular scenario, because I can't, go in there and show you me editing these things. But again, I can go in and, double click, and so you won't see my mouse in a second, right? You do still see my mouse, but what I'm doing now, I'm going to change the 30 that you see here to 25, just to show you that these things are completely tweakable, and you have to adjust. There is work involved, and again, these are the things that you'll pick up in terms of the course. So I've just changed this, and it's now currently showing at minus 25, right? And again, I'll put that back to 30 because I don't want to mess up my indicator. I worked hard to find that sweet spot, and I'm not about to lose it for the sake of testing in a live stream. So let me put that back to where it was. Um, so yeah, so these levels, what do they indicate? So this top level here, it shows me, and based off of chart analysis and reviewing what happens when volume is within this level, it usually lines up, and I mean 8 to 9 times out of 10, right? You're hearing that, my people. 8 to 9 times out of 10, when volume is within this region of 20 to 80, it aligns with a huge trend, a significant trend to the upside. So let me show you. All right. Again, we're looking at this level here, right? We're looking at these levels. So whenever you, regardless of a shape, whenever you see anything between the second green line and this first green line, right? It doesn't matter what the shape is doing. If you see any movement within here, I want you to look up and look at what's happening on the charts, right? So I will start from here, right? And then we'll go backwards just to show you. So again, those of you who tuned in yesterday, you know exactly the significance of this blue and red line. But I want to just show you. So this particular spike, so I'll zoom out just so that make it a bit more dramatic. So here, this peak or this entry into this zone of ours signified this move, right? Keep going. And all I'm looking is buys right now, right? Up market, pushes to the upside. This introduction here, right? This movement aligns with this move, right? This introduction aligns with this move to the upside. Again, we're in a bullish market, so you're going to see this even more dramatic once we actually. So we're in a bearish market. So when we go through this on the opposite spectrum, you'll see it even in more full effect, right? So again, this move here, please look, right? Look at where volume is and look at what's happening on the markets, right? Based off of where volume is. And I haven't pieced these algorithms that I want to encourage you to go back to yesterday's stream, learn the first steps before we even touch volume, because volume is probably the third or fourth thing that you want to look at. There are steps across the system that you want to follow before you even get to volume. So again, lining that up, and we can go back and back and back. So I mean, I'm on the weekly right now, so it's not really even the best place to show you. But please, if you look at this on the daily, right? So any introductions to this area lines up really well with these moves, right? To the upside, these big trends, right? And then, the little trends you see when the market's consolidating and moving sideways. Yeah. Look at where volume is, right? And that's the introduction and the next piece of this volume indicator that I want to talk about is this dead zone here, this dead space, this area of nothingness, right? Where this will signify to us there is not enough significant volume to push the market in either direction. And what does that, in terms of applying it and applying these principles to our and using that to kind of drive our decision making, again, theta fin, an insight to investment excellence, right? Giving you these tips and gems, you shouldn't just listen to me and then think, oh yeah, that makes sense. Please, guys, we need to apply these principles and concepts, not necessarily using this exact indicator, because as I said to you, there are thousands, if not millions of indicators out here that will dictate volume or give you an insight to what volume is doing, right? This just so happens to be one of many that I use, right? But this particular zone, right, this dead zone lines up extremely well with a market when it's consolidating, when it's just ranging, right? When it's just flat, right? It's not really going in either direction, right? Because again, using the principles and what the numbers actually mean rather than trend lines and drawing things, there is not enough, regardless of what the market's doing. And obviously, yes, people will talk to you about levels and things like that within the forex space. Identifying levels when you need to be able to look and see when the market's ranging. But the reason why it's doing that is because there's not enough volume to really push the market in either direction. There isn't enough supply. There's not enough demand. However you wanna phrase and term it. But instead of you speculating, instead of you having to rely on yourself drawing lines and um, it being very subjective or really up to your interpretation of getting it right, that you've identified the levels and things like that. Because again, a lot of that level identification on charts does not factor in things like regulation and news and all of those principles that sometimes do drive up price, sometimes do cause a drop in supply, and that's got nothing to do with areas of resistance. That's got everything to do with the regulation and the news and the fundamental side of investing, right? And you can't read that on a chart. I'm sorry, no matter how much technical analysis you've got, if there's a war that breaks out tomorrow, or all of a sudden, all all cryptocurrencies become regulated and there's a massive drop in price, where does technical analysis come into that? Where do trend lines come into that? They haven't got a say on any of those things, right? And that's why I'm saying these indicators and averages and basing your decision making based off of these core fundamentals: volume, right? Price, action, right? Crossing and moving of averages, and using those as the core bare bone and foundation of your trading system means that you'll be able to do a top down analysis with more accuracy. So I did say that I wanted to, I'm not going to make this all about volume really, but we will look into how that becomes important. So, just to kind of stick to some sort of order, I'm going to draw again, please forgive me. I'm going to place a rectangle, just to show us when we entered this particular bearish market, right? Here. Here, right? So what we're looking for each time is selling opportunity. So if we go backwards, the daily, right? We will see that this is when, this particular, just make sure I've drawn that correctly. Bear with me a second. Get rid of this. Get in again. Right. Let me just line this up. Let me line this up with our indicator, so it's not based off of pure speculation. It's entered into our region. Yeah. Let me start this top-down analysis on the daily, just for this example's sake. So it's going to be a lot clearer in terms of what I'm doing here. So we will insert a rectangle. So starting from analysis. So here, right? So from shapes. So within this region, and this is when we entered into this bearish market. But from here, if I go backwards, right, and look at this, and again, please don't, if you're just joining this is not based on support, resistance, or anything like that. I have drawn this. For those that watched the live stream yesterday, you'll understand that I'm doing a top-down analysis based off of this cross on our daily, and this first sell signal being confirmed by what I've just shown you in terms of volume, because this lower part of our volume indicator, this lower level, so again the top level up here indicates volume to the upside, and then there being enough volume in terms of demand, and then volume for supply. A lot of people selling in terms of being able to make a trend is this section. So between the -30 and the -70 level is the sweet spot for us in terms of this particular indicator for identifying selling trends and bearish trends. So with that said, let me just go back to my chart. So this is, again, what we do is line up our first indicator. Again, just to give you a quick overview, find out a bit more about this on the previous stream. So our first indicator was this candle here that crossed and closed below our first indicator, or first and second confirmation indicator. We then lined that up with volume and identified that on that candle, you can see it here, it's the movement was within our trend to the downside. So that's why I've drawn this zone here, so that I can then do a top-down analysis, right? So that any movement within here, I would only be looking for sells, right? Nothing to do with the zone, right? You can now just ignore. This is just to show you that at this point is when we entered the trend, and we're still in a downward trend on our higher time frames, right? I'm just showing you top-down analysis using this principle. You can ignore it. It's nothing to do with, when price moves into this. No, it's just to show you that on the higher time frames, we are still in a downward trend, a downward market, a bearish market. So regardless of what price is doing, we're not looking for sells in this particular market. And any signals that we get to go long, you can see that it's not moving past a certain point, because on our higher time frame, we're still in a bearish market condition. So again, even if I go to the hour, you can see, again, it's not going above that point, because on the daily, you are still in a downward trend on the daily. So regardless what indication, what is fueling these small spikes, it's still respecting that on the higher time frame, the signal is short. You're not in a bullish market condition. So regardless of what happens on the 15, on the 30, where you're seeing these big moves, it's still predominantly in a bearish market condition. So this is how you can do top-down analysis, so that you just to give you an indication. So if you wanted to do more intraday trading and look at get the signal in terms of the market direction from the higher time frames on the daily for this example, but you then wanted to make quick scalps in terms of whether you're trading this or whether you're doing a pump and dump kind of strategy throughout the day, just look for opportunities to sell. Get your signals that line up where you see, market conditions that show you. If I just zoom in to today's, some market conditions that show you that there is volume to the downside, right? So if you see a cross, you identify a cross right here, or cross here, or cross here, you wait. So again, because it's in the dead zone, it's not giving you the signals to go too early, right? It's giving you that signals. It still obviously came back up, but when you got this particular signal, right, this cross here started above and crossed below, volume respected that and indicated that you're in that zone now, right? You're in that zone to go short in this particular it's under 30 minutes. So you were able to quickly get a gain on that market trend, right? And this is the insight that you won't get by looking at -5%, let me just speculate and do a pump or a dump, let me get in on crypto because it's about to pump. It's about, no, if you look at these principles in this way, you avoid buying crypto or buying Bitcoin, or putting a few £100 into Bitcoin when you are in a clear downtrend, or you might put let's say you put £100 in today, for example's sake, right? Or the other, let's go to market conditions. Actually, it's easier to show for me to show you what I mean. So let's say right now, right, we're getting a obviously we know that we're still in the downtrend and it's going to have to respect that because on the higher time frame we're still within a downtrend, and you can see that it's not respected it as a level, but because of we're looking at this from a top down approach, we've got a short signal on the daily, right? A strong short signal, and volume even on the weekly volume is respecting that we're still very bearish on Bitcoin. So all of these false moves or indications to go long and things like that, you have to just be disciplined enough to look at your higher time frames and identify market direction. And that is the only time that I would advocate drawing levels on here, is just to kind of guide and help you, to show you that, you know what, this is where in terms of my top down analysis, this is the boundary line. This is where I got the signal to go long on my daily, sorry, to go short on my daily. So any movements that I see going into this area, I need to go up and check what's happening. What's the signal like? Where's the volume like on my daily? Has it entered a bullish? Has the trend reversed? And these, I'm just touching on these little tips that may be going over your head. But again, that's where kind of now it's obviously it's not as easy as just saying, look, it's crossed, it's gone green, you've got volume. These are the things that now would separate you from, in terms of beginner to intermediate, or even intermediate to expert, and being able to do a full top down analysis, be able to be able to quickly even identify, using this method, to then identify when a trend is ending in terms of the higher time frame, and being able to spot, hang on, price has now come out of this range by a long shot, right, and continue to push up, and not sitting there and thinking, oh, when do I react to this? Yeah. So there are things that we can obviously build into that. So yeah, I'm just showing you again, as I was saying before, having these small indications or small areas where you think, oh yeah, you know what, I've got volume here to go long. Let me put 500 into Bitcoin. But you know that you're only a few points, literally £260 away from the short signal on the daily. It wouldn't be wise for you to expect that, because it on the higher time frames, we're still getting a short signal and a sell signal. So what you would do is, in this instance, is be looking for areas where market is giving you volume that is going with the grain, right? So in this particular instance, I just ignore this. I just use this as, you know what, let me just not put anything in. Let me look at your alternative options. Let me put something like XRP onto the chart and see what that's doing, right? Again, using the same principles, we can see that XRP as well is currently in a downtrend. It's currently in a bearish market conditions. Yeah. So with that said, again, applying the same principles, if we've identified that it's in the downtrend again because of our cross and close below our baseline, which in this instance was not supported by volume until this particular candle, where volume agreed with our signal. So in that instance, yes, we could see that it's going long and there's enough volume again because it's entered our zone. It's supporting this particular move here to the downside. And these are things that you could do live, real time. Obviously now it's entering into the zone. And what I want to show you is, okay, it's all good and well. Like if you get a signal and maybe there's not enough volume, you can track this for a few days. You can track it. Nothing wrong with that. And then because you're still within that frame, once you see this candle, have a look at volume then. Okay, it's okay to then take that move, right? And get involved in that. But what you don't want to do, and what I don't advocate doing, again, just showing you what to do in the live market conditions, is be in this situation where you've joined and it's so far away from the baseline, but then you end up making decisions based on the last um, um, entry into this trend, right? Which was probably a week and a bit ago. Yeah. So so the 1st of September, right? Because you don't know that whether this trend's about to reverse. Volumes in a place that's not really favorable, so it'd be going sideways. And these are the principles that help you to make decisions in real time, to make decisions based off of what's happening today, what's happening now, right? So I'm just going to quickly draw out these actually, no, I'm not going to draw out these market conditions on the chart. I'm really annoyed at myself for drawing onto the chart as it is. So as you can see now on the 4 hour, it's giving you a signal to go long, right? However, it's quickly gone back under, even though there's volume to the upside. It was giving you indication that, yeah, there's volume to the upside. You can ignore all of this because of the fact that the volume and the current trend on the daily supersedes it. Because from I have to, aren't I? Just to show you. Because since which candle was it that gave us first signal, second signal? Yeah. So we'll draw it from here because that is the most recent cross. All right. So since here, we're in a sell, we're in a bearish market. So anything that we see underneath here that's giving us signals to go long will just be false, because we're way below in terms of where the trend is to be looking for the long signals, right? Because we always have to go back and respect what's happening on the higher time frames. They're more accurate. But what we should be looking at is these potential selling below our top down approach, right? Because we want to be trading with the grain. So we don't want to be getting in on XRP. In this instance, if we're trading it, if you've got a broker like Pepperstone, which allows you to trade crypto, if you've got a pro account, yes, then obviously you've got access to this and you can trade it in either direction, right? So this is where this becomes beneficial. So you can just sell and look for sell trades. So even on the 4 hour, just use the same principles. Look at volume, where you've got volume in the sweet spot for the supply, sell, right? Look for sell opportunities because they will be following the market conditions, because near enough every signal to go long, even when it's presented volume within this space, it's being superseded by the top down approach, because in terms of the larger time frame, we're still in bearish conditions. So you have to ignore these signals to go long, because there simply isn't. This is just macro volume. In terms of the larger, that might have been within those I guess 16 hours or so, right? Based on these 4 candles, 4 times 4, 16, right? During those 16 hours, yeah, there may have been more people buying. And that's just where these retail, and in terms of, people seeing a lot of red and thinking, yeah, it's time to buy. And then quickly realizing that in terms of the big money and the big money in crypto, that's not the direction supply is going in. We're not in an area of demand. There's not a lot of people buying because of the amount of speculation for whatever reason. And this is what these small spikes in volumes are. It's just the people that are kind of looking at it. Oh, you know what? XRP has really dumped. It's about to pump, and this is what that macro volume refers to. But in terms of the grand scheme of things, we're still very much in a bearish market. So what you want to be looking at is positions for supply, right? All of these people that bought, no, they're dumping. So they're even selling off whatever XRP they bought because they're trying to avoid further losses. And that's where we can still get in. We can still have a look at something like this cross where it was in the danger spot, but then this cross occurred. And by the end of it, it was in another sweet spot. We gain, right? We gain. So again, we can look at this on the hourly. look for the exact same principles, guys. Apply the exact same principles. And here it even shows you even more. We're way below. We're way below our top-down analysis. So all we should be looking at is positions of sell, 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 right? And this is where you see now the big runs, the big momentum. And guess what? Guess what lines up really well with that? Our volume, right? And I'm not cherry picking here, guys. I'm not, because I'm going to show you each and every single level being played out within our volume indicator. Here, look up, right? Look up. When I'm saying look up, it means look up at the chart, right? So here we're in this sweet spot for selling volume. We don't care about the shape. We don't care about the direction this is going in. We're just in there. So between this candle here on the chart, all of this, right, this entry here, because again we're using it just in terms of entry, right? So we're looking at the position that the cross occurred, right? So here, position that the chart is auto bouncing. I want that. So we're looking at the point of entry on the chart. So this would have been so the first cross occurred here, right? It didn't have volume, went back up, it crossed over. Didn't go to, yeah, so we would have picked up this cross on the daily, to be honest. This is our first initial cross. But you can see that in those first few hours, you would have been eating all of this because the actual initial cross would have happened because, yeah, it would have taken a top-down approach, and this square here is indicating the cross on the daily, right? So in terms of on the daily, would have gotten in somewhere here because it was ranging for the first days. I think it was this kind. Yeah, you'd have gotten in somewhere there on the daily anyway. So all of this volume then catches up with itself. Then you see that there's a lot of dead noise in terms of market condition going sideways, but this doesn't affect you. And this is what I'll break this down into a bit more detail on the next stream, I think, because I really want to touch on this and explain these ranging markets where noise, but then it's also contradicting some of our concepts. But I'm looking at this because I'm from a point of view that I'm, as a professional accredited trader with Pepperstone, I'm able to trade this in either direction, where some of you may not. Some of you have got, accounts on Binance where all you can do is buy crypto, right? And then you can only sell what assets you've actually bought. So it doesn't allow you to trade in either direction. But then some platforms do. Some platforms do, and if you're lucky enough to have a platform or broker that allows you to trade crypto off the bat, guys, this is when you can take advantage of this, because all of these crosses and where you're seeing volume dropping into this noise area, it doesn't affect you if you're in a trade, right? Because I'll break this down when I put the next piece of my algorithm, maybe this evening, the next piece of my algorithm onto a video to show you, what happens in terms of managing a trade that you're in. I might actually place a live trade just to show you in terms of trade management, and show you what happens, because once you've actually made your decision and placed a trade, the next thing you actually need to do is remove. So let me hide this, right? So in terms of entering, once you've gotten your first signal and you've got your confirmation and you've confirmed that volume's there, you get rid of it. Why is that? Yeah, you get rid of it because you don't need volume to then kind of become a distraction to you. You want to take away the noise and the false signals, because again, it's got one use, and that's signaling volume in terms of when you get into a trend. There are other pieces to this algorithm that we then need to build upon, right? And manage and how we actually then get out, how to identify, when a trend is finished. And again, now this is where we start to ask ourselves these questions. And I will show you something very quickly, right? Just to treat those that stuck out the video. But yeah, so I've obviously got red dots and things like that littered across my baseline, and this moving average is changing colors and things of that nature. But if I told you just to cut away all of the noise, right? And again, we're looking at this from in terms of XRP. If I was to tell you to cut away all the noise and just look at the red dots, right? So in terms of this, let's speculate, let's speculate and say that there was enough volume for me to get into this particular long position based off of the averages and the situations that I've talked about in terms of crosses. So if we're to cross and close here, and let's say volume was enough, right? Here, I just want to zoom in here just to show you something. And then I'm going to end the live stream, right? Just to give you guys food for thought. So we've got a cross here that's occurred. No, we'll use this one. Just be more realistic. We'll use this cross. So this cross has occurred. And let's assume that volume was there, right? Because I can't be bothered to put the chart back on. We would have gotten in on this trade, right? Now, I want you to follow this, right? And just look at all the red dots, because that's my signal to stay in the trend, right? And I'd stay in that trend until I see a blue dot, which is my exit indicator. And again, I can openly say that to you because I haven't disclosed what this indicator is. So that's 800. Sorry, what? Yeah, 839 pips across the space of a little over a week. And I'm not having to worry about volume, but I can see on chart when my trend has ended and a safe place to get out of and cash out my trade. So again, let's say I entered on the same principles that we've discussed in the previous live stream. I've entered this trade on this particular cross, again, just speaking hypothetically. And all I'm doing is following these red dots because they signal to me that the trend is still live, and I follow it. I don't use volume. I don't get distracted by price and what it's doing and any further crosses. I literally follow this until it turns blue. I would still be in this trade, and we're already 179 or odd pips deep in profit, right? And this is the beauty of what I'm trying to tell you about volume, an algorithmic approach to trading and investing, right? Because if I was now to put BTC USD up on there, the same principles apply. Yeah. So if I was in this region here, and look, it's comical sometimes, right? So if I'd have gotten in to this particular trend, right? You can see it's ranging. But then now I've got a signal that's gone blue. I'm out again, right? I'm out in terms of the daily. But this is a live moving, I'd have to wait until this candle closes in terms of getting out, right? Because it's on the daily. But I can also use my hourly, my 4 hour, to ensure that, yeah, you know what, I'm getting out at the right times. And this is essentially, the bread and butter in terms of getting into trends and knowing when to get out. So red, follow until the blue, which indicates a change of trend direction or trend strength, right? Because these red signals or these red candles, red spots, do not pay attention to the sideways movements. All it signifies to me is trend continuation, which I will talk about in the afternoon live stream. Obviously today, in this particular stream, I've tried to touch on identifying the trends, and again, it acts as a part 2. to the previous stream. And this evening, we will continue to dive deeper into this and what all of these things mean. But yeah, I thank you all so much for tuning in. Just bear with me 1 second. Right. So thank you so much for tuning in. Thank you for joining the stream or watching this video after the fact. But yeah, that was a quick insight. You know, there's not a lot of viewers, it's still very early days. And you know, the videos will only get better, but I'm going to stick to this crypto analysis just to show you the breakdowns, the moves, and be able to just give you tips that you can use and kind of think about these principles. And once you know you guys have consumed a few videos in terms of the core concept, because again, this is very surface level. I'm talking about very surface level things, but you can see the strength in terms of how well they hold up. So if you're able to follow and remove all of that distraction and noise from your trading and from your analysis, not having to depend and rely on trend lines, and not being speculative and being disciplined with your risk management, you'll be able to succeed and you'll be able to you know, invest in a much smarter way. When you see these concepts played out on the market, you know, some of the things that we've touched on today, people are drawing lines all over the place and it becomes super confusing. But with the right set of technical indicators, market principles, because you can do some of this stuff without the use of indicators, you know, because again, the whole top-down analysis, right, depended on me drawing and seeing where these levels are, just so that I have an idea of where my bearings are on the market. And there's nothing to stop you from doing that if that's what you're using things for. But in terms of using those concepts or to kind of identify areas of strength and this, no, guys, you have to be able to back it up with numbers. You have to be able to use the numbers as the guiding points rather than it being about speculation. Yeah. And then it's about being algorithmic in your approach, because the more you're algorithmic in your approach to your investment, the less it's about your emotions, the less it's about, you know, being too, I guess, taking unnecessary risks based off of, you know, where you are at, what you're feeling, maybe desperation. You really you get away from treating it like gambling. That's what I would say. You know, if you're following the numbers and you're following these systems in terms of the numbers in front of you, you will be able to get away from the emotions of the market and look at the numbers as just numbers and make decisions based off of the facts, not subjectiveness, and just being objective in terms of, okay, the indicator's telling me to get out, the indicator's telling me that the trend is stopped. Looking back and being able to say this is data driven, right? It's a data driven approach, you know, and that's, you know, it's even part of our name, theta fin. It's the rate of change over time, right? So thank you once again for tuning in. We've been Theta Fin, you've been yourselves, and we thank you and look forward to seeing you on